Good morning, everyone. It's Monday morning, March the 16th. Welcome to our trading room. Just a moment here. I'm going to get you my monitor. The markets opened considerably stronger this morning. Here's the NASDAQ. And you can see, well, let's take a look here on the Falcon. You can see that there was a nice continued rally through the overnight. A nice little continuation of Friday's session. So we just had the opening bell. Right now it does look like we are going to be in a little bit of an uptrend. On my other monitor, I'm also watching soybeans and crude oil, but I would be happy to take a look at any market which is of interest to you. I'm just putting my trade manager on my other charts, so bear with me a moment while I get that done. Hope you guys had a nice weekend. I know mine was very nice. Short. They're always short, aren't they? Okay, I'm actually a little bit bearish on this market today. The daily chart looking a little bit weaker. Let me see if I can shoot a trend line across here. So we've got that trend line down here, and we have this sort of trend line right here. And I bet you we're working on a double dot signal here, an early trend change signal. Let's see if we get a little bit of a green bar happening here. That could be an opportunity to sell, working on a red bar buy. Oh, and here's this raptor signal that we've been entertaining. If this bar turns red, then what we've been looking at is a pullback to the hard edge. So, okay, well that one stayed yellow. But it's been this type of scenario here where if you get a yellow bar, red bar forming, the market will or does seem to have a tendency to pull back to the hard edge. Here's a yellow bar, blue bar, again pulls back to the hard edge. Not much of a move there because the band is so shallow, but because this band is deeper, I've been experimenting with that type of setup. Okay, working on our trend change signal now. Our first micro macro cross went into yellow bars, so we're not quite ready there. And this is still early, right? We're only a few minutes into the session. I'm trying not to get too excited. All right, now we have a first micro macro cross signal. Let's see if I can. Oh, and now we're into yellow bars. All right, well, that fixes that, we're just going to sit here for a few minutes longer. Thanks, Jim. Jim says the advanced decline is about 1100 to the good, so the market being a little bit more bullish right out of the gate. Alrighty. Let's take a look at crude oil while that's unfolding. Here's crude oil on the Eagle. Built themselves a nice little range here. You see we have the market kind of confined to this region like so. And they're working on the bottom end of this trading range. We do have a lower swing high here, which suggests that the sellers are currently in control. There's two ways you can play this. Well, actually several ways you can play this. I'm going to set up to take it below the low. Can I cover above the high? Nope, I can't. That's the problem with trading crude oil. You always have to run such a tight stop in order to get a trade on. Nope, can't even do that? What is up with this? How tight do I have to run this? Aye. All right, well, you can see this is crude oil for you. It's obviously a higher risk looking trade. Oh, and we got a positive slip, which is rare for crude. But I was going to say there's a couple of ways you can trade this. You can just trade the breakout based on the lower swing, or you can always look for the market to do this test and retest action, which it should do. If it breaks down through here, we should see it retest, and that should give you another opportunity to sell somewhere around there. Now we'll see what comes of that, but that's a couple of ways that you can take that trade. You can also wait for the second push on the entry. Right now that we're through, you can see where the reaction's going to come, and then you can try to enter below the reactionary low, similar to here, where you let the signal trip, react, and then come back. And I may choose to hold my stop just a little bit longer because of that possible reaction. All right, we'll put crude oil back on the shelf. The NQ still trying to stay very bullish. For those of you who weren't here on Friday, oh, here we go. We're getting another opportunity. I'm going to try this because I have the luxury of being a room moderator. Oh, and I guess I should select my stop strategy. Oops, let's cancel that. Okay, so I want to cover above those highs. What I was going to tell you is that the other day, for those of you who weren't in the room, we've been making this observation about the Raptor for you Raptor owners, that we've been comparing the positioning of the yellow bars in relation to the trend and our directional bias. Now, you're going to say, well, Eric, you're doing the exact opposite of what you're just about to tell us, but the gist of it is I've been comparing the relationship of the yellow bars to each other. So when the yellow bars start to print lower, we're actually looking for a sell signal. Now this one here, the yellow bar still printed a little bit higher. Let me see if I can find you a better example. We were looking, I think, at the YM, and it gave us a very clear indication. Here's something not too bad. Yellow bar's printing lower, yellow bar's printing lower, a nice little sell. Yellow bar's printing lower, a nice little sell. Here, yellow bar's starting to print lower, and a nice little sell as a result. Now you'll see here, we don't actually have that happening. We have the yellow bars still printing higher. I'm working on this counter trend signal that we've been toying with, where we've got the yellow bar, red bar on the soft edge, and I'm anticipating it to trade down here to the hard edge. In fact, I'll throw a limit order in there. And I think there's something wrong with my Trailblazer. I'm going to have to... Oh, yes, Sunkim, you're absolutely right. Well, we're going to stop out here in a moment. Sunkim says, Eric, shouldn't you be on the other contract month? And why did that not engage? Okay, there's something wrong here with my Trailblazer. 1 second, folks. I had a little chart problem this morning and I forgot to go into the other month. But you're right, we should be trading the June contract. I could have accounted for my chart problem too. Okay, we'll just let that load. Okay, and yes, that was a problem. This morning when I loaded my charts, my stop strategy was not loading correctly, so I had to load it manually, and it totally slipped my mind that we are now into the June contract. Thank you, Sunkum. I totally forgot about that. I remembered on Friday, but I forgot this morning. Okay, so that counter trend signal not working out there, not working out here. That might not be such a good signal after all. But I have been noticing, as I said, with the yellow bars, as the yellow bars print higher, the market tends to go higher. If the yellow bars start to print lower, the market starts to go lower. So we'll play with that scenario a little bit today. Oh, well, here we go again. So the yellow bar is printing more or less in the same region. And once more, we're getting this counter trend type signal. Now, I don't mind them when they're printing in the same location like this. I suspect that we're going to see this head lower now. But you know, I've kind of been talking like a bear today anyhow. We are getting two red bar sells here. I think this trend is getting a touch on the weaker side. Let's see if we get a selling opportunity through here somewhere. Working on a trend change signal here on the Falcon also. Come on, give me that red bar buy that I can sell. No, they're too deep already. I'm going to have to wait for that first micro macro cross. Okay, so now we have our first micro macro cross signal. All right, as we're retreating here, it makes it a little bit easier to try to get a better entry. If we get into yellow bars though, I'm going to scrub the order because it means we're still moving sideways. And you can see we have sort of a short-term trend line here that the market seems to be honoring. If you connect the dots across the top though, you can see that we're starting to flatten out somewhat. Oh, and now we're into yellow bars. Hmm. All right, come on, give me a green bar sell here on the hawk. I'll get all over that. Well, I have to say the NQ holding its own. Wow. Look at them go. Wow, look at that rally. Well, I guess I let my personal bias cloud my judgment, which is easy to do. We did get a buy signal here off of the eagle. Like a friend of mine always used to say, the big money is always on the surprise side. Just when you think it can't go any higher, they go higher. Just when you think they can't go any lower, they go lower. So just watching the yellow bars here, the yellow bars printed higher here, printed a little bit higher here, kind of held their own here and here. Okay, well, we'll just let them settle out a little bit. For you YM traders, the Raptor seems to be following this yellow bar scenario a little bit better. You see, we had yellow bar here, yellow bars printing here and here, always printing higher, and another yellow bar printing higher here still, just shortly after, about 5 minutes after the market opened. And here's the Raptor on crude oil. And see, now we have seen these types of situations also, but not as often, certainly not as often on the NASDAQ, where you're actually getting a full-on buy signal coming into a bearish band. This signal seems to have good follow-through. And likewise, we've had full-on sell signals in bullish bands. Oh, although, look at that. Here, this one, there's a full buy signal. Did not follow through. All right. That just confirms what I feel about counter-trend signals, that they're not worth your while. Lots of yellow bars here. Yellow bars start printing lower after a lot of sideways stuff. And a nice little fall off there. Another lower yellow bar. Lower yellow bars, but no sell signal. There's the big reversal. And now higher yellow bars. Well, that one, you would have reached your profit objective, but not much more out of that one. Now we start to waffle, lower yellow bars again, and let's see if that follows through. Oh, yes, it does. Well, that's the trade we're in right now on our eagle. We're nursing it a little bit lower. Yeah, Dustin, I feel your pain. Dustin says, I went in above those highs on the NQ. They hit the stops and proceeded higher. Yeah, I know. I had a trading friend. His favorite expression was never trust a breakout. And what we did is we looked at, well, like I've explained to you guys, the whole concept of testing and retesting. So the market comes up, tests the highs, breaks through, comes back and retests the highs, right? This characteristic up, down, up pattern, comes back with a buy signal. Now you buy. Now that they're retesting the area that they just broke. And that's what happened here also, except it happened a lot faster and not quite as clear, where they come up, break the high, retest, come back with a buy signal. The key for this whole test retest thing is that your swing points are higher, right? This is what it looks like in an uptrend. You need the higher swing points. And this is what it would look like in a downtrend. So long as you're getting this type of situation going on, you can be fairly certain of the direction. Ooh, Jim got nailed, I think, for a 10-tick slip. He says, Eric, have you ever seen 10-tick slippage? That sucks. Yes, it does. I did get slipped, I think, 8 ticks the last crude inventory report, but I was in the room here, so I could do it on sim. But yeah, crude oil is the only market I've ever seen give me horrendous slippage like that, which is next time on inventory day, I am going to run a stop limit order. It's not, you usually don't get that kind of slippage in the NQ. I'm hoping you didn't get a 10-tick slip in the NQ. That would be a little bit unusual, to be sure. So I've been reading a little bit about the economy and the pending FOMC meeting and so on. From the looks of the NASDAQ and the Dow, traders are expecting a very favorable report out on Wednesday. Yikes! Jim got slipped 10 ticks on the Dow. That I have never seen. Wow, that is brutal. Somebody pulled a bunch of orders just in front of Jim's. They got filled 10 ticks later. Yikes. Hmm. Well, with activity like that, it makes you wonder if this rally is really a sustained rally. I know I'm talking bearish again, but you can't help it. If they're trading higher on fumes, Okay, crude oil falling off nicely. Just about to hit our profit objective on our Eagle trade. Oh, there we go. Just found that one. I'm just going to bring this over and show you this test-retest concept. First, I'll show it to you here on the Falcon. So this was the trading range that we were looking at this morning in crude oil. And the market broke down, came back up, and look at where it is retesting, right at this area right here. Comes back with our sell signal, and you can see we are making lower swing highs as we anticipate. So the Falcon also generated a sell signal. Let's see if we're to our profit objective on that one yet. Yep, just hit our high probability target. So there was an opportunity in crude. Here was our Eagle trade. Right, so we identified this range. And the market broke down. Now with the Eagle, of course, sometimes you'll see a more pronounced swing. Sometimes you're just going to get like we had right here, where the market just traded up, hit the bottom end of this trading range, and then proceeded to head lower. That was my cue that it was okay to engage my stops and start letting the stops roll down. Fortunately, we tagged our profit target along the way. Now that we've hit our high probability targets, I suspect that we might see a little bit of a reaction here. Of course, this is crude oil, so it can do what it wants, or it will do what it wants. Here, the trading range from Friday's session, same kind of concept. Notice it broke down during the wee hours, came back up, retested, generated a sell signal. See right here? So like I say, sometimes these retests will take a little bit longer. Sometimes they develop a little bit more quickly. But if you're on the alert, if you're watching for them, usually you can take advantage of them. Jim says the bank index is weakening and the Russell is not the same as the NQ or the YM. Why doesn't that surprise me? Well, if Jim took a 10-tick slip on the mini Dow, which is pretty substantial, to say the least, it makes me think that they're rallying on fumes. It's not to say that's not enough to rally the market, but yikes. look at that. We had a trend line touch signal here. I'm curious whether that will reach its profit objective. Truth be told, I feel a lot better about selling now. I don't know why, but maybe it just suits my eye a little better. Soybeans are waffling a little bit. I thought we were going to have something tradable there for a moment, but maybe not. All right, things looking well, I wanted to say things looking a little weaker again. Honestly, I try not to have a directional bias when I open up the chart. It's a bad habit if you do that. I'm trying to let the charts speak for themselves. Okay, soybeans might be working on a second push entry here. A little bit of a mess this morning, right? Soybeans not really showing much direction. They have been in a bit of a decline. Technically, this is a late filter entry signal, and it tends to be a high probability signal. But I let hey, I'm trying to explain something here. I let the signal trip so that I could take advantage of the second push on the entry, but now they're starting to run away on me. So I think it's going to have moved a little bit too far to actually take it, but I was looking at doing something like this. Well, maybe they'll give me a chance at that second push anyhow. The eagle not moving quite as far yet here on soybeans. And we're getting a green bar sell off of the hard edge, which we know to be a pretty reliable signal. So we'll see if soybeans give us a little bit of a reaction here and perhaps an opportunity to sell it. Let's see, what would that look like? And last but not least, we also have our hawk, which shows us the sideways action a little bit more clearly. A lot of these yellow bars, a green bar sell here, possible red bar buy. Now we've seen this happen in other markets where if we get a green bar sell preceding a red bar buy, this can lead to a rather substantial rally. So conflicting signals here in the moment in the soybean market. We'll see if this red bar buy actually trips. The nice thing about the red bar buy is you could cover it way down here. All right, so we've got a couple opportunities right now. I'll disengage the stops because they're contrary to our entry. And perhaps we'll see a little bit of a hit and run here, or if the market breaks down, perhaps a bigger move lower. Okay, so the red bar buy has disappeared. We did have a green buy dot here, and that's since become a red dot. So this is now a sell order, or the makings of a sell order. So we'll put that back up on the shelf. The advanced decline slipping a little bit. It's sitting around 950 right now. Jim says 1895, so almost 1900 to the for the buyers and 934 for the sellers. So we're getting a little bit of conflicting information. Jim's watching the YM, the Russell, and the NASDAQ. He says double top in the YM, that's the mini Dow, Russell new high, NQ new high. Oh, and the VIX is getting stronger too, so a real dog's breakfast. We got a little bit of everything. It's one of those situations where sometimes the more you look at the more confusing things become. Price action will always be your first clue. So we're getting a possible macro pullback signal here. And my concern is that, do I have enough room to profit here before we test the extreme? Right? Because there is a chance it will fail off of this next rally. So how do I handle this? Well, first I set it up to see, okay, if I risk it down to here, do I think I can hit my profit objective before the market will reverse on me? I can dial down my risk amount, which is always a good thing to do. Oh, stop it. So now I've got my entry signal. I can cover it below here. My profit objective was somewhere up here. All I'm really looking for on a trade like this is either to hit my profit target or allow me enough room to manage this trade to a break-even situation. And actually, if break-even is my objective, I could probably get by with a tighter stop. So you see, I could do it even less. I could risk, say, 0.5% of my account. Set it up like this, throw in the order. If it goes south on me, okay, well, 75 bucks isn't a deal breaker. And I can go with my more aggressive stop strategy, say like a bar high low. Oh, well, I'm going to have to do it manually now. So I can see if I hit my $50 target, then I can pop out of the trade, or if it rallies from here, oh, it's almost close enough to take the trade to break even. Come on, get up there a little bit. Show me 40. Oh, come on. Okay, there's 40. I'm going to roll it to break even. If it fails now, well, it fails. And I think it just kissed the $50 target. I do have a runner in here because it's just a single. Yep, so there was our $50 profit target. We have hit our high probability target. We'll see whether or not it follows through now or if it reverses and takes us out at break even. And of course, there's nothing wrong with closing out your trade, taking your profit when you have it. Come on, get up there. See, so now we're testing the highs, and it will either fail here and start heading lower, or it will break through and continue higher. Get up there. Ooh, I should have left a runner on in crude oil. Crude oil still falling off sharply. All right, well, we got tagged at break even. So now we have a clue, right? Our first our macro pullback signal did reach its high probability target. Now it's starting to fold over. And now we're thinking, if it gets below the macro pullback signal, and I don't mention this very often because I don't want you guys looking at counter trend signals. You saw how the counter trend signals were working on the Raptor this morning, not very well. But the macro pullback signal is, you can do this with all your signals actually. You can trade them counter trend. In other words, if you have a failed first micro-macro cross signal, you can take it the other way. Same thing with a macro pullback. If you have a failed macro pullback signal, you can take it the other way. Now, I'm going to throw this in. We'll see how it plays out, but I'm going to also show you why we don't, actually, let's close this up for a moment, why we don't concentrate on counter trend signals. Here's a first micro-macro cross, right? We could set up to short the failure of the first micro-macro cross. Why do we not do that? Because it's a high probability signal and it's more likely to rally. Same thing with the macro pullback signal. Why do I not set up the failure of the macro pullback signal? Why did I not set up to sell it like this initially? Well, because it is a high probability signal and the market will usually go up and find its profit objective. Okay, but here we have an opportunity. We're going to see about selling it, and we'll see how that works out. Because we have had a test of the extreme now, and yes, I'm a little bit bearish on the market today, but we'll see what kind of follow through there is here. So that's a counter trend opportunity. We're getting a similar counter trend here on the Falcon. We do have the double dot, and with the double dot signal, I like to go back in the history of the chart. Oh, well, it's right there. Did we get a big reaction the last time the market was here? No, but we are trading at a significant, little swing point. So again, the double dot signal is not something that we usually look at taking, but there is a counter trend opportunity here based on the test of the extreme and the possible failure. Okay, Jim said we're getting a similar signal here in the Raptor. Okay, so we're printing a yellow bar. We'll see if this comes back now and prints another yellow bar lower. Yeah, we're right on the 10 a.m. highs. So that could offer up some support to the market. If it breaks down, well, chances are we could see a little bit of a run to the downside. Certainly the hard edge here at around 43.32 seems like a reasonable target. And our hawk trade working out not too bad. I'm going to go with the swing high-low strategy because this is counter trend and markets don't turn on a dime. Sometimes you need to give them a little bit more room to turn around. Yeah, or like Jim says, you can look for larger buy volumes. sometimes you can tell where the buyers and sellers are at by what the volume is doing. Come on down. Oh, they're thinking about it. All right, there they go. That's a little more like it. More better. Okay, well, you'll see here why I'm holding my stop a little bit in the Falcon trade, because our trend line has just changed color. We took advantage of the double dot counter trend signal, but because this is likely to turn into a full trend change signal, I need to give it a little bit of room here to sort itself out. I'm not too surprised to see it want to rally here, and I have my stops in an ideal location. If the market trades above these highs, well then I'm definitely on the wrong side of this trade. Same deal here for the hawk, which, look at that, they just came a couple of ticks short of the first profit target. Might develop into a first micro-macro cross signal. But again, counter trend signals, they're not what you want to be concentrating on, really. You want to be looking more for your high probability with trend signals. Come on, you know you want to go down. Oh dear. Oh, here come those buyers. Okay, sellers, you got to get busy now. Okay, so now we're getting our full trend change signal. Notice it came in just about the same place that we took our entry off of the early trend change signal, or the double dot counter trend signal. It's actually built into a late filter entry also. Come on. There they go. It's about time. Well, they're taking their time heading lower. First micro macro cross building now on the Hawk. Just not willing to give it up. If we can get below these swing lows here at 43, 41-ish, I am pretty sure we're going to see this market dip. Jim saying, Eric, draw a trend line at 43.41 to the next low. So something like that. See, the longer they take to get to where I want them to go, the more this starts to look like a bull flag. In which case this would be nothing more than a retracement. So I could already start rolling my stops somewhat. In fact, I probably should. Like I say, this 43.41 area, a big deal for this market. obvious buying going on here. It'll be a little bit easier to see here on the hawk. So you can see we have this whole region right through here that has buying support. Okay, there's the first micro-macro cross. Let's see if we get some follow-through on this one now. Ay, 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 you guys. Okay, so they tagged our first profit target, which is good. Lots of sideways action here. Okay, sellers, last chance. Oops. Oh, come on now. Play nice. All right, well, crude oil slowed somewhat also. Soybeans still moving lower, so our soybean trade holding its own. But soybeans taking their time heading lower, and this recent little swing here making me a little bit nervous off of this 43.41 area. I was really anticipating the market to break that, but doesn't look like they're thinking the same way I am. Last chance on the part of the sellers to push this market lower. And I hate it when it gets so close to the swing points because I'm always thinking I'd hate to get stopped just by a tick. Just to be wrong by a tick. So here you can see we're having several tests of the extreme, the market heading lower, still kind of going sideways overall. But definitely time for the sellers to step up or it's going to be game over. In fact, I'm going to be optimistic here and go with the bar high-low strategy. And that will roll my stops down with every bar should the market continue lower. Come on, sellers. No. Oh well. Counter trend trades. Oh well. Well, they're pretty content just to go sideways right now. And everybody's kind of doing the same thing. Um, well, like I said, crude oil still trying to head a little bit lower. Oh, okay. Paco, good morning, Paco. Glad to see you can make it. Paco is asking Eric, I wonder why did you take those two trades in an uptrend situation? I just connected to the web and was surprised. Um, Great question, Paco, and I should highlight this for those of you who joined us a little bit late. I was pointing out a counter trend scenario, and I was saying why we don't normally take counter trend trades, even though you can take any with trend signal. It has a counter trend version to it, but we don't normally take counter trend signals because the with trend signal is so strong. So for instance, here is a first micro-macro crossover signal. And I don't point this out very often to you because I don't want you looking for counter trend signals, but there is the possibility of taking, instead of buying the first micro-macro cross, to actually set up to sell it. Because if this signal fails to the upside, it will definitely head lower. But you can see the problem with doing that is that you usually get left out of a profitable trade because the first micro-macro cross is a high probability signal. It goes up, it hits your profit target, and meanwhile you were looking in the wrong direction. Well, the market rallied up here a little bit, gave us our macro pullback signal, which also hit its target. But then it started reversing, and we had this test of the extreme. And that led me to point out that you could actually sell the macro pullback signal. About the only signal you ever see me recommend counter trend trades on are these red bar buys in an uptrend or a green bar sell, or pardon me, yes, red bar buys in an uptrend or green bar sells in a downtrend. It's because these signals here are less reliable. So I don't, a lot of times if I get a red bar buy and it looks like the market is struggling to head higher, I will actually set up to sell the failure of that signal. Now here in this instance again, we had the test of the extreme. There wasn't much going on, so I was just pointing out to you that this is a possible counter trend signal, and you can cover it right above the highs. And of course, it came just within a few ticks of our entry. Had I waited, I would have had a green bar sell that would have probably had a better entry to it. The green bar sell hit its profit objective. And then we came back with a first micro-macro cross to the downside here, which did not fill. Right? It got close, and so now the market has moved into a first micro-macro cross higher. So that's what was going on there, Paco, is I was just looking at, there wasn't much going on. I was just showing a possible counter trend signal, and it eventually showed once again why we don't usually take counter trend signals. Same thing here with the Falcon trade. We had the double dot signal, and normally with the double dot counter trend signal, what I do is I look back into the history of the chart to see what sort of reaction we had last time prices were trading at this level. Well, in this instance, I didn't have to look very far. I had a very short way to go. There was my reaction right there. And you can see it was a pretty small reaction lower. But once again, I had the test of the extreme, the possible failure. The market gave me the signal near the swing low. So I thought, well, it's an early trend change signal. We'll see if we can't take it a little bit lower. And it tried. It actually came back with a late filter entry trend change signal. But you're absolutely correct. These were both counter trend signals. And I try not to take the counter trend signals when at all possible. So then we came back. Well, the Falcon hasn't given us a signal just yet. But that's what was going on there. There wasn't much going on, so I just showed something. Well, I don't know what to tell you guys. We're probably going to see more of the same until Wednesday. The more I've been looking into it, it looks like this Wednesday's FOMC report is really going to be instrumental. Well, you guys, we might button things up here. Looks like the market's kind of going flat. I would still expect a little bit of a move lower today. You can see here on our hawk, we're pretty much moving sideways. Lots of yellow bars again. Broke the upside. No real follow through just yet. Tested the low side, so I don't know. It might be best to leave things alone until we get outside of this trading range and then look for that test and retest pattern, right? Let it get up, come down, and go higher, or let it break through the bottom, get up here, and come back down. But so long as it's trading within here, I don't know if we're actually going to see anything tradable. Of course, if it comes back here, gives a macro pullback, that might be an opportunity for a little something to the upside. Otherwise, like I said, sometimes you just need to know when to leave the markets alone. And on that note, let's wrap up the room, and I'll be back again tomorrow morning. I hope to see you guys then. We'll talk to you soon. Bye for now.